Good morning, everybody, and this is your S&P 500 day trade setups for today. So we did get a bit of data on Friday, well Thursday and Friday actually, which forced us to close down the bottom here. We do have the FOMC meeting this week now as well, and basically what this does is it opens up a massive head and shoulder. So there's our left shoulder, we've got a double head, and there's our right shoulder. Neckline is right here where the previous support was, and we've been trying to defend it all of last week. So this is a key area. We are back below the moving averages. We haven't got a crossover yet, and oscillators are kind of all over the place at the moment. The way they've separated like this, you would anticipate a fall. Now, let's just get a bigger target in here. So that's the height of the head and shoulders. I'm going to be a little bit conservative because there are actually three areas that we need to pay attention to, and I'm putting them all in quickly. So that's first one. Well, this is the first one here. That's the closest to the head and shoulders target, and that one is kind of at the head and shoulders target. So those are the four levels. I'll get them to them now. So obviously break and retest of 39.19. We are looking first downside target of 38.64. Then we're looking at 38.06. Then we're looking at 37.67, and then we are looking at 37.39. So that is kind of the view that we have at the moment. The other thing that you need to bear in mind at the moment, though, is that. Okay, so we need a clear break and retest for any of those downside targets to take place. We start drilling down through the time frames. You'll see we were above the moving averages most of last week, came back, and we've now kind of tested the grouping of the moving averages as well, and we've tested them. So yeah, technically that is a confirmation of a bearish structure, or should we say we need to start looking for moves to the downside. Then what we have is we do have this gap here as well, which is on the 3 hour. Sorry, I don't know what I did there. So we do have some movements, well, not movement, but we do have some targets to the upside, should I rather say, and we are sideways. So although it is a big head and shoulders, it could also just be a big range. And yeah, this bottom of, or should I say the low of last week is probably the area we need to be paying attention to. So a break and retest of this 39.15 area, that opens it up lower down. But for the moment, we also have, we've been in a downward trend for a few days, came back and tested the 155 here on Friday, and you can see pretty decent opportunity for a short here, but you would have missed that because get the 15-minute and I'll show you, because that happened as data came out. Here you go here, so you see the massive gap down, so you would have missed it. You would have been looking for, sorry, wrong day, I think we need more coffee this morning. There it is. So you can see we sort of hovered there, then we had this massive gap down as the data was released, and then gradually tried to recover and then fell over. So that gap is still open as well, so you need to keep that in the back of your mind as well. Have a look at what's happening with the oscillators right now. It's separating, it's hovering here on the trend line. I think it's going to be a very wise idea to be looking for shorts. Now, I just get some of these levels off here. Okay, so have a look at this level here. You can see, look at how much structure there is if I go to the left. See, 2 days, 3 days there, another 2 days there, and then all over the place. We did try find support twice, and now we're sort of coming back up to it. So if you come down to the 15 minutes and you have a look in that area, you should pick up a few opportunities, and I would do something like that. That's our zone. So we're looking to be short of 39.40 or alternatively 39.50. So that's kind of the area that we're looking to be short of. And then we are anticipating a break of the trend line. We're anticipating a revisit of 39.15. Break through 39.15, you're looking for a retest of that. So break, retest, then you're looking at 39.64, and then 3800 would probably be the next level. So that's kind of my view for today. I think we are more than likely going to either drift lower, or if we do start drifting to the upside, we'll probably form a bigger range. Excuse the noise, dog can't lie still. But you know, FOMC is on Wednesday, so very possible that we just bounce around in a tight range here as well. So you need to sort of keep that in the back of your mind. And been a weird year, but if it is a range, I think you'll be capped by 39.87. Lastly, if you do have time, 5 minutes. You can see yesterday the 5 minute upward trend before the market opened was pretty much, you could have been buying off any structure to the downside and then just sold out before the data came out. And then you can see once the data came out, it became very volatile. But late in the session, you can see here, if I just use my cursor, you can see, look to the left, look for the tail where price has gone past, and as soon as you see a level, there's a decent rejection there, and then there was another rejection there. So kind of something like that. 7,500 point stop losses for 200 point gains. So 2-to-1 trades that you can pick up. Anyway, that's kind of my view at the moment. There is a little gap here. There's a couple little gaps to the upside. There's one right at the top here as well on the 5 minutes. So there are quite a few gaps to the upside. So don't be too surprised for a complete move all the way to the upside here as well. Sorry, to the, we were, what was that, 39.87. That is also possible. So the only way to trade the shorts here is wait for the visit to the structure, and then you want to see price action at the structure. 5 minute, 6 minute, 10 minute, 15 minute, 12 minute charts, that kind of level. You want to see a rejection. You're looking for inside bars, engulfing bars, or pin bars at the level, and then you're looking to go with the trend, where the trend is down at the moment. So that's kind of the structure that you're looking for. You're not looking for longs until you get above the high of yesterday and you find support up there before it starts going. So at the moment, short it is. You're looking for rejection of any of these levels, and you're basically anticipating a break of 39.15. Break of 39.15 becomes very bearish. Anyway, that's kind of my view at the moment. Hope it helps, and we'll catch up with you tomorrow morning. Cheers for now.